Hey guys, it's Ian here with Income Switch. I want to go over a couple different things going into the first week here of October, October 5th. And first thing I do want to say is we do have to be extremely careful right now. There's a lot of news-based movement going on in the market, and if you've followed or worked with me at all, you understand how much I despise that, how much I hate it. Um, So we are obviously with the Trump get COVID news. We did have the Nasdaq come down almost about 3% on Friday. But here's kind of the way I see things right now. So if Trump does come back, and what they're saying is he's going to come back and probably back at the White House Monday at some point. When that news comes out that he, either beat the coronavirus or this Regeneron cocktail that he's testing out, if that's coming out that's saying that that's going to be a positive, I mean, I think these markets are just going to absolutely rip. Now, on the opposite side, let's say he comes back and things are getting worse for him. I think that we see a massive dip. And one of the groups here actually mentions, I do think 11,900 is where we're going on the NASDAQ on the NQ futures. And if there's bad news that comes out with Trump, I'm thinking we're probably 99.50 is the area that I'm kind of looking at here. So again, I do not like to trade based on news, but this is a kind of a special circumstance that everybody needs to pay attention to because this is going to make a huge thing. Other thing that you kind of want to watch too is if things do get worse for him, um, short the airlines, uh, Delta, American Airline, Spirit, whoever it is, short them if things get worse because people are not going to travel if the president of the United States does get extremely sick from this. But again, if it does come back out that things are getting better and he actually is healthier come Monday or Tuesday, these markets are just going to absolutely rip based on that news. So just something to keep an eye out. Like I said, I don't trade the news. I hate it. I'm a technical trader, but it is something that we all need to kind of watch out and make sure that you're not caught short or long if something happens here. So. But as far as different tickers that we're going to be looking at this week, the first one I actually did post a chart already. I'm looking at RTX as a Raytheon Corp. They had a real nice day. Looks about 3.27%, $1.88 per share move. And it is setting up here on the long side for it looks like for a nice swing for us. Let me do this. I'm actually going to show you how I set this up here. So I'm actually using the Fibonacci retracement tool here in Thinkorswim, which is that percent with the extension line. But I'm going to go back to the daily actually. So my plan here is above $60 on Monday. I do want to be going long this. So for this Fibonacci extension, I'm going to go back until August, so a few months. I'm going to take the top from August. I'm going to take the most recent low and the top on Friday. So it gives you about a $69 price target there. So I do think that was good. I was actually saying about $10 to $15 in my other post, and that would actually be a good fit for it. So what I'd look at would be, here we go. So $69 for your first target, and then I've got 76, 78 for your second target. So I just say 69 and 75 targets. And what I'm going to be looking at here, I know because I looked at this earlier when I made the other post, they do have earnings coming up here at the end of October. So when I'm trying to find a good play into earnings, because I do not hold over earnings, I'm actually going to look over here and look at this implied volatility. So 36, 33, 33, 38. So October 30th is the highest volatility, which also happens to be the week that the earnings are. I'm not going to do an out of the money call on this, but what I would probably be looking at would be the 57s or no, so there's not enough volume from the Friday move at the 55. The 55 was actually what I wanted, what I would look at, the 75 delta. But I would look probably here at the 57s, which is actually about 66 delta as it stands right now. So I would take these calls. 57 October 30th calls on RTX above 60, looking for a $10 to $15 move on this one. I do not think that's going to happen before earnings, but I do think that you could get, maybe 65, somewhere around there, kind of where this bottom of this Darvis box is right here. So anywhere from 65 to 66, I think would be a good price target for an earnings runner. And that is something that I'm going to probably take on Monday if that looks well. So keep an eye out on RTX. Another one, and I actually got into this one on Friday, was McDonald's. So McDonald's had another real good day. We got in about, I think it was 220 when I got in. And for McDonald's, they also do have earnings coming up here. But thought I had a Fibonacci on this one already. Apparently I don't. So we'll do another Fibonacci retracement on this one too. So because we are near the top, I'm actually looking for a breakout of the 227 area, which would be above this most recent Darvis box. And just doing a real short-term Fibonacci, because again, we do have earnings. So a break of 227, I'd be looking about 235. Now, I'm actually only going back about a few weeks here. I'm going back to September 16th for my top of this Fibonacci. But I do think that would actually be a good, again, this would be probably an after earnings target, but above, 225 to 227, you should be able to get another $5 from that. So I'd say about 230 to 232 here before the earnings coming up here in McDonald's. Again, we did get on this one already on Friday, so we're hoping that this continues up. I ran a couple scans and I didn't see a whole lot on some of them. And I did not even look at these charts yet. So let's just take a look here. So let's do, I don't know what this is, but MAC. Ooh, that's a ugly chart. But it came up 5.7% on Friday. And this is going back until June. So that's pretty far for a total retracement here. It does seem to be setting it obviously has a nice base. Support has been pretty good about around the $7. We're at $7.41, $7.36 after hours. I would not normally trade a setup like this, and if I were, it would be real tight. I could start a position at $7. Actually, I wouldn't go anywhere as long as it's above $7. I would be comfortable in a position here. I would do a single addition at $6.34 if it came down to that. And I'd be looking for about a $9.50 to $10 price target on this one. I doubt I would get into this, but it's not a bad setup for common shares, honestly. So we'll see. So I'm going to write that one down and see how it goes on Monday. PCG, those are all junk. So I've got all these. GoPro. Pets, I used to trade pets a lot. Fastenal's too slow. Don't like any of these ones. So we're going to do a 1550 Darvis and see if we have anything. And again, I have not run these scans. I'm actually doing this live for the first time, taking a look at these. So nope. What about DOCU, DOCU? All right, so just looking at this one, I like this a lot actually. So looks like earnings had a nice pop and then failed and starting to get a nice, it's almost a fish hook type pattern, which I like to trade a lot. Pretty ugly here on the daily, not seeing a whole lot here. And I don't know if there was news around DOCU or what. On the 2 hour, yeah, why did that fail during earnings? So that's something that I'd look at, and if you know, let me know, but that's something to keep an eye out for. You know what, so this is what we would do here. So I don't mind this. I don't like the Friday candle, but Friday was obviously a rough day for tech. So if we open up on Monday, green on the NASDAQ, there's a couple different things you could do here. So let's say, so 2:16 after hours. That's terrible. Okay. All right, so if we were to open up on Monday, green on the NASDAQ, you could do, I would consider something like this, a little bit lower risk. Could do almost a butterfly. I would do an unbalanced butterfly. So in this, I am, in this example, buying one of the 210 calls. I would be selling two of the 217.50 and buying one of the 220 calls. So that gives you an unbalanced butterfly, which as things stand exactly this moment with the market closed, $303 risk, 197 to the upside with your peak at 428. So it give you a little bit more than double on the upside, and you know, what is that, about 60% on the top. So that's an option. The other option that I would consider here would be doing a vertical, and I wouldn't do it too far out. So where would I want this to be? 230. I think we could get 230 here in the next couple days. So your other option here is so get a little bit more than double. You could do buying the 220 calls in October 16th, buying the 220 calls, selling the 230s for a 3.63 debit. And what that would do would give you your 100% over the 230, which I do think is possible looking at this. But again, this is extremely dependent on the market. This is not my favorite setup. And you could almost consider a iron condor here as well. Let's take a look at that. So if you go 230 to 190. So if we did an iron condor, and what I would do, so we would go 230 on the calls. And on the puts, let's see if we can do 195s and see what that looks like. So you can, so we go 235s, there you go. So 870 for 4130, so that's actually not too bad. And that would give you between 195 and 230. That's actually not a bad one here. So it's a big risk. Even one contract, you wouldn't do one contract. So that's not bad for non-condor either. But yeah, there's a couple of different ways you can play DOCU. It's not, again, not my favorite setup. Does look like it's doing a little bit of fish up, but it did fail again here at 223, so you need to be careful of that. But I think with a green market, that's something to keep an eye on. OKTA, let's check out this one. Okay, so a very nice squeeze here. Looks like closed the day strong. So OKTA, this is another one that, obviously keep an eye on. Here, I don't see when earnings are, but we have our November 6th volatility, which is about 1% more than anything after, and about 3 to 4%. So I would look at the November 6th. Obviously pretty thin, so I don't like to see that. I would play these 224, the only ones with volume, these 230s. So if I were to take our fib, go there to there to there, 264 is a little bit high, but you have your 230 top here. So yeah, I'd still be looking at 230. Long term, you could do 264, but you would want to almost have it set up to be able to do an addition here around 200. So you would need to do pretty farther out on something like this, in my opinion. So I would almost look at something like the January 21 15s, but that would be holding over earnings. And there you go. So you have 303. Volume was on Friday. You've got 1,400 open interest. That is what I would do. I would do these January 21st 200 calls with the idea that you could make an addition at $200. I think the $200 would be a good spot to add. Yeah, yep, that's exactly what I do. So that's the trade I would make here. Would be your $200 January 21st. And with the idea of a $200, you could make an addition. So that $200 actually lines up perfectly with our volume control here in September. So that's exactly what I would be doing. So there's just a couple of ideas for you guys to keep an eye on and see if any of these set up for you. Again, I have Raytheon, McDonald's, OKTA, and what was our other one here? DOCU. So keep an eye on those ones. I think those should be good setups this week. And as always, if anything changes, I will let you guys know. But if you have any questions, let me know. Thanks, guys.